Our first question comes from the line of Bill Peterson with JP Morgan. Please go ahead.
Yeah. Hi, Thomas and John. Nice to see you at ACT Expo last week. I wanted to dig a little bit deeper in the feedback you were receiving. If you think about the fleet operators you were speaking with, were most of the discussions really centered around ERX, or, I mean, what was the impression of Carno at that time? Are there still fleets interested in the hybrid program? If they're going to be looking at putting in some trucks in 2024 and beyond, where do you think the discussions were most focused on?
Absolutely, Bill, and great seeing you out at ACT as well. So I would say the focus from the trade show was both on the Hypertruck ERX and then on Carno as well. So we had 2 trucks that were participating in ride and drive events that were the ERX truck, and we did over 100 ride and drive experiences with those trucks. So it was actually, there's a video out there online of one of the fleet managers saying that he couldn't even get a ride in it because the line was so long. So no, the interest level was fantastic in the ERX. A lot of great discussions with fleets who want to be adopters of it, both medium-sized, very large fleets, and some smaller fleets as well. And then we heard a lot of buzz around Carno. Actually, we heard from numerous people that Carno was the talk of the show, and people didn't really understand it going into the show. And I think we were able to showcase the technology, how it really works, and get a lot of people excited about it. But the reality is with Carno is it is still a few years away from commercialization into a vehicle. As we shared on the call today, we are going to put it into initial stationary demos next year in 2024. So we will actually be bringing Carno forward into stationary first prior to putting it into vehicles. And then the sales team is working with fleets on adopting the Hypertruck ERX, the natural gas range extender. So interest was fantastic from the show.
Our next question will come from the line of Andre Shepard with Cantor Fitzgerald. Please go ahead.
Hey, guys. Good morning, and thanks for taking our question. By the way, hopefully we didn't interrupt Bill's. I don't know if you have any other question, but I want to touch on the Hypertruck ERX and the deliveries, Thomas. You've mentioned on the call today, I think in the past the expectation was to deliver those 210 orders by Q1 of 24. Now it looks like we're targeting 30 deliveries in 23. I guess my first question is twofold. Is that 30 deliveries for this year, is that distributed amongst Q3 and Q4, or is that going to be predominantly Q4? I'm just trying to understand, again, since the production timeline was moved up. And then the second part of the question is any color on what 24 might look like? Thanks.
Sure. So let's take Q3 first. So as you mentioned, 23 first. So as you mentioned, we were able to accelerate when we're going to start installing trucks, which will actually start happening in Q3. From actually getting the units back into fleet's hands, that will actually still probably take place in Q4. So as you're thinking about revenue start, look at Q4 for that. But then as we communicate on the call, the goal is deliver 30 of the Founders trucks by the end of this year. And then to the second part of your question of what's 24 going to look like. So, we really need to go back, have the discussions with the Founders program fleets that we mentioned, as well as other fleets who have been sitting on the sidelines saying they're interested in it. But as we had shared previously, we had booked out all the build slots in the Founders program. We need to go back to those fleets and look to pull them in as well. But I think the overall general message from this earnings call is we're going to start production a little earlier, but our ramp-up growth plans for production are going to be a little slower, primarily driven by we want to be smart with capital, right? So we want to ship less units at a loss, so we'll conserve cash that way. Give our engineering team the time to roll in some product improvements that are going to pull some costs out of the system. Also give the suppliers some time to deliver components to us so they're not putting as much surcharges on them. And then from there, as we move into having a profitable system, look to scale up volume at that time. The other side of this is these initial units that we're shipping, we will place them in the hands of more fleets than we initially anticipated. That way we can hopefully convert them into placing larger orders as they actually experience the technology, and then they'll be ready to receive those vehicles as we're moving into being profitable on the system. So this is really just an effort to optimize or preserve cash, right, and shipping units at a loss. Let's minimize that as much as we can and move towards profitability.
Got it. That makes sense. Thanks for all that color, Thomas. And so is it still fair for us analysts to assume the 210 orders will be delivered by the end of 24? Just trying to, again, for modeling purposes, trying to better understand that.
Our goal will be we're scaling into the hundreds of units as we get into 24. So, still planning on growing volumes with everything. We just we're not ready to share exact numbers yet of what 24 is going to look like.
Okay, fair enough. And sorry, one last follow-up from us. In the past, you had disclosed some tentative, ASPs for the ERX, I think in the high 300,000s. Any sense of what gross margins may look like either in Q4 23 or 24? Again, I know you're not disclosing any specific numbers, but how should we be thinking about those? Thank you.
Yeah, so I'll take the first part and then have John take the second there. So in terms of the pricing, as you mentioned, we had previously shared MSRP or pricing on the Hypertruck ERX would be in the high 300,000s after we took into account the IRA benefit of $40,000. So we're still looking at being in that same ballpark, but it's going to be in the higher threes or closer to 4 as we go into to production here. And then John, you want to take the profitability question?
Yeah, and if you listen to what Thomas had mentioned on the call, the actions that we're taking now are helping us get closer to not having a negative gross margin. We noted last quarter that we did expect the first trucks to be sold at a slight loss just due to startup and logistics and so on. So these actions will help. And maybe if I can just put a little bit of clarity on this, we've been seeing some companies that are selling full trucks, selling them at negative hundreds of percent. And, we're not talking anything like that. We're talking, excluding overhead, which is a little bit of a wild card at low volume. We're talking about, minus 10% plus or minus. So it's not a big number, and it's something we think we can close due to the actions that we talked through. So initially, we're still probably a little under, upside down, but this puts us in a better position, and we expect to be able to reach that positive gross margin more quickly this way.
Got it. Okay. Thanks very much. Congrats on the quarter. I'll pass it on.
Your next question comes from the line of Steven Fisher with UBS. Please go ahead.
Thanks. Good morning. Just to follow up on that last point there, and I know a lot is in flux and things are changing all the time, but would you envision that somewhere within those first 210 units or so, there will be positive gross margins, or is it still likely sometime after that first batch?
Yeah, I think it's still a little early to tell. As Thomas mentioned, we're expecting to ramp up production as we get into 2024. Again, we're seeing great interest from fleets. It's just really all about what's the best startup strategy that maximizes the use of our cash and minimizes the potential for margin loss. So, volume will help, time will help, chances to get some of these design changes in will help. So, we're just starting off a better foot here, and it'll help us ramp up.
Okay, that's helpful. And then just in terms of the cash burn, it looks like the burn you had in this quarter, it would leave you with about 10 quarters worth of cash, and I know you took out $50 million of burn from this year. So are the broader plans that you have to slow that pace of burn extending that 10 quarters by years or by quarters? And then what would you have to see in order to kind of curtail spending further, and would sort of the Carno be the obvious place to trim back if you need to do something further?
Yeah, let me address cash. So that's a great question, Stephen. If you look at where we ended last year, we had $422 million. Our outlook this year being around $150, that'll leave us somewhere around $275, which puts us in a position that we're, not needing to raise any money this year, gives us, the flexibility not to raise money next year and into 2025. The unknown is, of course, what we're going to spend after this year. We haven't given an exact forecast, but we are an asset-light company. We don't expect to need a lot of capital spending. We're doing what we're doing now to reduce working capital as we build up. Let me comment on expenses a little bit. I mentioned, I think at the end of last quarter, we're leveling off the growth in spending. If you look at us this quarter compared to the fourth quarter, that it really is leveling off. And that leveling is really driven by the powertrain side of it as we finish up R&D and move on to commercialization. Carno is not a big part of our organization yet, but I will say it is growing and we intend to grow it more. So we're certainly not going to back off in any way on Carno, just given all the interest and opportunity with that product. So, if you're thinking forward-looking, we haven't put a number on it, but we wouldn't expect cash use to likely grow. This year's probably a target that we work around, plus or minus. It might be a little bit lower, might be a little higher, but the balance that we have now gives us a lot of runway to be able to get to the point that we're generating gross margins. And also, Thomas mentioned starting Carno stationary demonstrations next year. That gives us a good launch pad for getting that product to the point where it could be generating gross margins too. So I think I would just put a point to it by saying, hey, these actions that we're taking give us a lot of time, such that we're not really at the near-term mercy of the markets if we needed to raise cash.
Terrific. Thank you very much.
Your next question comes from the line of Luke Horton with Northland Securities. Please go ahead.
Hey guys, I'm on for Donovan Schaefer as we had a couple of overlapping calls and had to do a little divide and conquer, but just wanted to touch on revenue recognition with the first 30 trucks and going forward as well. Will these be clean sales and title transfers, or will there be some kind of financing or deposit or any sort of other arrangement where it's not just a matter of multiplying units by that high 300,000 ASP to get the revenue number?
Our plan would be for these to be straight sales to the fleets, such that they can recognize, for example, the IRA credit, and therefore we could also recognize the cash from those sales. So the expectation is we're trying to get them to be pure sales versus any kind of financing arrangements from Hyliion. That's certainly not our intent.
Okay, got it. And then just touching on the winter testing, were there any key takeaways from the completion of this, and have you guys closed out all phases of this winter testing?
Yeah, so winter testing went well. We've checked the boxes on what we needed to do through the cold months, which included, putting truck in some thermal chambers that were bringing it down to like negative 40 degrees. So, pretty robust testing. We're pleased with how it went. Obviously, there were learnings that did come out of it, some design changes, modifications that we wanted to make, and we'll roll those into the product. But overall, we're pleased with how the testing went and don't see it changing our commercialization plan. Actually, as we shared on the call, if anything, we're pulling up the commercialization plan of getting into production. So all went well there. Obviously, as we continue to build the last batch of systems here before we go into start of production, we'll continue to test those and look for areas to optimize. And that does lead into some of the cost savings opportunities I mentioned. We found through testing and validation, some things are over-engineered or designed to be more robust than they need to be. So we can scale some things back in order to still be able to hit all the requirements of the industry, still have a strong product that meets the life requirements, but isn't over-engineered, and then that'll help us pull some costs out as well. And that leads into some of the cost-saving efforts we mentioned.
Got it. That's good to hear. And just last one here on the regulatory landscape. So any updates or pending determinations that could impact you guys coming out of the Treasury Department on the IRA bill, or anything similar along those lines where there are rulemakings or guidelines and process that could have a positive or negative impact?
Yeah, so I think right now, at least from what we're seeing, it's positive impact. So IRA is a $40,000 tax benefit. ACT, which is the mandate that CARB put on the OEMs, we're going to qualify for 75% of the ZEV credits that a normal BEV or fuel cell truck would qualify for. That we announced probably close to a year ago. The announcement just recently from a couple of weeks ago was that ACF, which is now the mandate being put directly on the fleets, telling them, how many of the vehicles they buy need to be electric. We're actually going to qualify for 100% of the ZEV credits that a conventional BEV or fuel cell truck would qualify for. So I think this is going to be a great tailwind for us, right? I mean, fleets are now going to be mandated that the trucks they buy need to a certain percentage, going into CARB following states are going to need to be credit generating vehicles and will be just as good as a BEV and a fuel cell truck. So I think it's a big positive what we're seeing from a regulatory standpoint.
Awesome. That's great to hear. That's it for me, guys. Thanks for taking the questions.
Thank you.
And apologies, Bill Peterson's line was cut off. We'll now take your follow-up question. Please go ahead.
Yeah, thanks for letting me ask another question. Wanted to come back to the fuel cell program, and I think you mentioned that integrating a fuel cell later this year, early next year. If we took your time frame of the ERX, where you started in the second half of 21 and carrying that through the second half of 23, something like a 2.5 year time frame, is that the right way to think about that program? In other words, from a starting point to an end point, or are there areas that would basically be already done because you've done the work on the ERX program and you're primarily just changing out the power source?
It's definitely the latter of what you expressed, Bill. So we're carrying over all of the testing, validation, learnings that we had through the Hypertruck ERX development, and we'll be able to apply those to both the Hypertruck Carno and to the Hypertruck fuel cell. So as we think about, let's take the fuel cell, for example, taking that into a commercialization effort, there's less validation that would need to happen on the powertrain. And then similarly, Hyliion is doing their own validation on the fuel cell as well. So it's bringing two things together as opposed to building an entire new product. Not saying that there won't be testing and validation. It's a more accelerated timeline. The other thing is to benefit with a fuel cell truck is it does not need to go through the conventional CARB EPA testing like what our Hypertruck ERX is having to go through. So as I mentioned on the call today, we have submitted all the documentation we need to CARB. That's a dual executive order process that we're doing joint with Cummins. So all that has been submitted, and we're on track to, we believe, receiving certification in Q3. That's a process that we would actually just forgo or not even need to do with the fuel cell development.
Okay, thanks for that additional color.
Our next question will come from the line of Mark Delaney with Goldman Sachs. Please go ahead.
Good morning, everyone. You have Will Bryan on the line speaking on behalf of Mark Delaney. Thanks for taking our question. So the first question is, or first, congratulations on pulling forward the timeline for the Hypertruck ERX powertrain system. But could you provide some additional color? What are some key things that need to be done to make sure that we get to that launch in the third quarter?
Sure. So first thing is we're building out our final batch of development vehicles. We have the initial ones already built. We're building out more right now. And those are the trucks that will go through extended fleet trials, and those will be happening starting this quarter in Q2. And we'll carry those forward even through start of production. We'll be doing fleet trials. So we'll be deploying those, and that will allow us to get more customer interest. And then I think the big milestone that we need to go through is just getting that CARB, EPA, NHTSA certification that I mentioned earlier. And the gating item I foresee is really the CARB certification. And the big milestone there was submitting everything we needed to in partnership with Cummins to CARB, and that happened in the first quarter. So we think we're on track and in good shape for a Q3 launch.
Thank you for the additional color there. And my second question before I yield the floor is just how far along are you all with negotiating terms with the founders' customers, and what has that response been? And additionally, are there any customers who are lowering purchasing plans at all? Thank you.
Sure. So we're still at the early stages of those discussions. We just recently kind of got all the final pricing of what component costs were going to be for building out the systems. And as we mentioned on the call, it has come in higher. So we're going to look to pass through some of those incremental charges onto the fleets. That is a customary thing to do in this industry. Usually if you go buy a brand new truck from an OEM, there's usually a line item on your invoice that says surcharges. So we don't suspect that that's going to be a surprise having those sort of discussions with fleets. But with that being said, these fleets put those initial orders together about a year ago now. So there are going to be changes to the fleets that are in that mix, and then we're going to also look to pull in additional fleets. So when we set up the Founders Program, it was structured with, I believe, 11 fleets. And so we're going to look to add more into that so that we can place these initial units with more fleets, a wider variety, and then look to build the backlog even further. So as we go into higher volumes of production, we have greater commitments from a wider variety of fleets as well.
Perfect. That's all from us.
As a reminder, to ask a question, press star 1. Your next question will come from the line of Jeff Kaufman with Vertical Research Partners. Please go ahead.
Well, thank you very much, and nice to see you at ACT Expo as well. Just two short questions. When we speak to fleets about EV infrastructure is a big issue, fuel cell infrastructure is a big issue. Are there additional infrastructure requirements that you're going to need geographically as these ERX units start to be run publicly? And then I guess secondarily following up on that, thank you for the info on the ACF and ACT availability. Are a majority of the sales you're talking to in California, do you need other states to adopt MOUs on the CARB mandates to incentivize the sales there, or are you looking pretty much nationwide at this point on the IRA credit?
Appreciate it. Let me break the question down into a few different points there. And once again, great seeing you at ACT Expo. Sorry, I know I had to run and cut our conversation short. But in terms of the ERX needing more infrastructure, so there's about 700 public stations in the U.S. That is plenty to get started. With a vehicle that has 1,000 miles range or up to 1,000 miles range, we're in good shape there. So the goal is more get these units out there, let fleets use existing infrastructure. I will say one of the common themes that we saw at ACT Expo is people are getting much more concerned about BEV infrastructure as well as fuel cell or hydrogen infrastructure. I shared it in the keynote presentation, but when you start thinking about, plugging in 10 trucks consumes the same power as the entire Super Bowl stadium consumes during game time, this is problematic for fleets. Or when they get quotes from their utilities, it's the quotes are 1.5 times the cost of the actual trucks, right? So if a fleet's going to buy 50 trucks, that means they're going to be spending could be in the range of 30 to 40 million in charging infrastructure. That usually, at least from what we've seen, prohibits fleets from moving forward with that opportunity. So, we think infrastructure is a huge advantage we have with the Hypertruck ERX. Now let's shift to the second part of your question of ACF, ACT credits. So, California has adopted those standards. You're on the correct thought process there that additional states are coming forward and saying that they're going to follow similar or the same mandates as what CARB is pulling forward. Now, they might be doing it on a slightly different timeline or some slight modifications to it, but generally they're going to be following what CARB is doing. And I believe there's been 14 states plus DC that have confirmed that they're going to be following a similar format as CARB. So over the years ahead, we suspect that that's going to be, as I mentioned before, just a great tailwind for us in getting fleets to adopt this solution.
Okay, awesome. Thank you very much.
Your next question will come from the line of Noel Parks with Tuohy Brothers Investment Research. Please go ahead.
Hi, good morning.
Morning, Noel.
Just a couple of things. I was wondering, as you've done a little bit of adjusting to, which fleets will see units, you broaden the set that will see get the chance to demo them out. Do you anticipate any fresh competitive pressure from other OEMs on just general time to delivery, or are the customers still pretty firmly focused in sort of a technology-first manner that they're most concerned about performance and not as concerned about timing, for instance?
Yeah, I think fleets are concerned about both, right? They want to be on the front end of adopting new electrified solutions. In terms of fresh competitive pressure, I think ACT Expo is a great showing of it, right? I mean, all the main players were there showcasing their solutions. We did not see anyone else doing a similar solution to what we are bringing forward with the Hypertruck ERX. We did see a lot of discussion on BEVs. We saw a lot of discussion on fuel cell trucks. But I think to the points we were talking about earlier around infrastructure, that's what's really concerning fleets about adopting those solutions. So I actually think as fleets get more into their cycle of trying out BEV vehicles, trying out fuel cells, yes, there are going to be some applications where they work, but then they look at the Hypertruck ERX and see this as something that's more prudent or applicable to more of a nationwide type of a solution. And, I think just even to give you an example on the BEVs, there was a ton of BEV solutions out at ACT Expo. They needed to bring in a diesel generator in order to actually charge those vehicles. So those trucks are sitting out in the parking lot running on a diesel genset. And that just kind of talks to, obviously that was a trade show and charging infrastructure wasn't deployed there, but that's not the first time we've heard of that. We've even heard of fleets having to bring in diesel generators in order to power up their EVs. So I think that talks to just kind of the problems that are going to be faced with BEV adoption.
Wow. Okay. That is surprising. That does seem a little bit counter to the decarbonization spirit.
That's our thoughts, but hey.
And you mentioned near the top of your comments that your next batch of trucks should be sort of your last design upgrade, and I just wondered what's I guess in your say last 6 months of tweaks to the product, what sort of things have you been adjusting? What sort of things are going to happen in this last go round?
Yeah, so thankfully it hasn't been major tear ups. I mean, we've done some changes over the past couple of years to optimize where weight is distributed on the vehicle. We've done things to improve the ruggedability of our painting spec on wiring harnesses and making sure they can really withstand the harsh conditions on the road. We've done improvements to cooling loops and systems. And, I think everything, it wasn't like we had to take a pause and say, hey, we need to go back to the drawing board and rethink things, right? Sure. Everything has been kind of going down the right path, just making optimizations to make sure this product is going to be robust and reliable. Some of the changes that we'll make in order to improve some cost downs, we see that there's opportunities in kind of the structural design, sheet metal design of some systems. We see that our cooling system provides more cooling, more robust than what's needed. So we'll look to skinny that down. There's optimizations and mounting and things like that. So that will not only pull cost out, but it will pull weight out of the vehicle as well. So those will be some of the things we look to optimize as we continue to go forward.
Great. Thanks for those details.
We have no further questions at this time. I'll turn the call back over to Thomas for closing remarks.
Well, thank you, everyone, for joining our Q1 2023 earnings call. A lot of exciting developments. I think ACT Expo was a great showing for the organization, both with the Hypertruck ERX and the Carno. So appreciate you joining the call, and we'll look forward to chatting again next quarter.
Ladies and gentlemen, that concludes today's call. Thank you all for joining. You may now disconnect.